Bitcoin is doing absolutely nothing. Per my yesterday's Bitcoin video, it's just all a big massage waiting for the FOMC event. And I do have some ideas about this orange line right here. The massage of price and why it's so boring is because I don't think price wants to go too far away from this, either to the down or the up direction, because of it would create too many limitations on what large players could do with Bitcoin and thus crypto. So the closer to that orange line up here, the more wiggle room they're going to have to create volatility within crypto. So let's go see why this line is important and what we can expect during New York time. It's about 2 p.m. on Wednesday, September 21st. So let's go get some Bitcoin. All right, so we're staring at the chart that I've been running live for my Discord and YouTube Cryptillion tier. So since yesterday, this is pretty much all price is done. If you want to take a look at how my lines have worked. And again, I haven't readjusted these lines to what price is done. My lines were already here before price did all this, right? So let's take a quick peek here and let's do a replay. Got stuck under that macro channel orange line. Got rejected by the monthly line, the blue. And found support from other monthly lines down here. So essentially it got rejected from the monthly cliff / the top of the macro channel, which I'll show you what that is. I'll zoom out. So piece this all together. Right now we're really zoomed in, right? And all these lines are missing context. If you're not a regular viewer of my channel, it's like, well, how do I put these lines? You're like, what the hell? How did you know that was significant, right? And why would price, do something strange there? So for a quick context, I will do the two lines of main interest are the macro channel top line, which is this orange line. And I'll show you that first. And then second, I'll show you this monthly cliff / monthly, it's now resistance, but support resistance line and why this box is here and why it's significant. So let's go ahead and go. I'm going to go to a different chart. And again, just the concept here is this is way zoomed in. So it's missing the context, and I'm going to show you the context right now. Here we go. And I'm going to stop drawing random lines on my chart, take off the EMAs, and put on what I call the macro channel that goes all the way back to the 69K top in November of 2021. I'll go to the 4-hour chart on Bitcoin to show you this. That should give me enough of the price history to get to the 69K top. Yep. All right, here we go. So here is the 69K top right there. Almost building up to a year ago. And you just a quick look. I mean, Bitcoin has been in here the entire time outside of one bull trap and now 2 bull traps. Okay, that's what just happened, right? And we're going to zoom in here. And so I'm going to go to, we can stay on the 4-hour chart. So just look, it fell back into the channel. So this isn't bullish. Got rejected by an origin line, which has 12 years of price history. All right, got rejected by that, fell fully back in, then got rejected by the top of the line, so it's very likely going to work its way down after Wednesday / Thursday. So tomorrow there's going to be volatility both ways. It's not going to give two shits about that line most likely. It's just going to swing above it, swing below it, just crazy stuff's going to happen. After the dust settles from FOMC, though, with the assumption that it's a normal volatility day, after Thursday, I could see boom, boom on Wednesday, and then, on Friday it finds itself here, and next week it starts coming back in. So that's what that orange line is on the other chart, way, way, way zoomed in. But you can see right here, this doesn't look bullish. This isn't bullish at all. All right, this is the where's the 17,000? So the $17,500 low is way over here, right? And so if we zoom in here to the 15-minute chart, that would be simply touching the first line down. And once you break back into a channel, you typically hit the point of control. And so it would make more sense if I zoomed out to show you that. It usually makes more sense to hit the point of control, all right, once you dive back in. And the point of control for that, bam, it's down, it's well below $15,000 if it were to get down there in a hurry, all right? I'm not saying it'll get down there, that fast, but over time I could see it hitting $12,000 or potentially writing this, or let me make this origin line right here a little brighter color because it's going to be in play soon. So it's possible it doesn't hit this orange point of control. So this orange guy is the point of control. It's possible that stops here at around 14.8 and finds support on this origin line right here. That goes back 12 years in price history and is parallel with the most important straight line in all of Bitcoin history. It's not the most important one. It's parallel to it. It's part of its channel. All right. And then zooming back into the 15-minute chart, now that we have the context, boom, 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 get rid of all these. I zoom in. I know it looks messy. It'll look better once I zoom in. There we go. Now we can see what we're dealing with. All right. And so that's the significance of this orange line. And you're seeing it way, way zoomed in. And this point of control right here is of the micro channel. So we are looking at Bitcoin in a channel, or inside of a channel that is inside of a channel. I know that sounds stupid, but it's a micro channel and it's working very, very, very well right now. And I think I have to go to the 1 hour chart to see all of price within this micro channel. So this micro channel fits within the greater channel. Am I making sense there? And once it breaks below this line, okay, down here somewhere, then all I'd have to do is what? Refer to the macro channel. That's it. But until this micro channel is broken, I'm going to use it. And I'll probably go to the other macro chart just for, context. But as of right now, it's just the top for the macro channel, the orange line that I have within the micro channel that I just showed you the context. That's really the only one that's in play. So I'm just looking at that line right now for the macro. I'm not putting the macro chart inside of this as well. This is all I need to look at for the most part, outside of the orange line, which is the top of the other channel, until it breaks out of here. Make sense? All right. And if it breaks to the upside, well, then it's going to break out of both channels at the same time. And then I'll just have to figure out how to do a different type of structural analysis. All right. Now, so for Wednesday, I don't think that price is going to want to get too far away from the orange line. So this is the top of the micro channel, and the macro channel one, the zoomed out version, is way lower. You see that? And if price gets too far away from this, then you're going to have a lot of support down here and monthly support that I'll show you here in just a second. So I think that Wednesday by 2 p.m. price should be somewhere close to here or to this monthly cliff, because that would allow price to have max volatility range like this for a 10% range. But if you're too close to monthly horizontals, then the volatility play to the downside, other bigger players who aren't a part of their plan will create too much buy pressure and would create risk within their plans to piss around with Bitcoin price, right? Because there's a lot going on here. So let's take a look at these. This box right here, that's around 18.7 or so, 18.5 to 18.7. And then we'll look at it up here at around 19.5. So around 18.5 and 18.5 and 19.5 are your monthly plays, and I'm going to go to a different chart to show you the significance of that. So here's the monthly chart. Boom. I will take off the macro channel and take these off. Here we go. So let's zoom way in here. When I say 18.5 and 19.5, all right. So the lower blue box, the top of it is made by this monthly wick down right here. All right. It's a $200 range. The blue box is down to here. That is made by a low that happened. Actually, where did it happen? Maybe I have to go to the 15-minute chart to see it. Maybe the 1 hour. Where did it go? Yeah, it's made by this wick that didn't really show up on the monthly for some reason. So the wick low right there. So it's about a little less than $200 range, and I'm considering that a monthly horizontal. So that's the context of the blue. And the idea behind that is why that's significant is if, price is breaking below, it's already, I mean, just look at these candles. This isn't bullish, right? You have 3 months of like a straight line here, and we're below it. So if you go below this like last front, this is like the final frontier, because it's just going to start free falling. I think it would actually ignore this wick low from this month, the month of June. So if you start going past this last area of support here that's going to be defended by the bulls, you could really start accelerating down, right? And in this month closes in 10 days, you might not hit this next origin line down, but if it does in this month, that's 14,500 this month. And it would be a big, big wave down. And monthly candles have done that in the past. I mean, it can really, really start flooding, especially with a stimulus like a 100-point rate hike, or even a 75-point rate hike with Jerome Powell being, really hawkish and saying, hey, if it doesn't come down next CPI report, I'm going 100 or something like that. Even if 75 comes out, but when he's speaking, he gives, he speaks about not slowing down anytime soon. It could really cause a flood down. All right, and the monthly upper line. Where was I getting this? I might not be able to spot this very easily. 20,000. Or was it just a monthly open? I think it was just a monthly open. 19. Yeah, it was. Did I say 19.5? Let's take a look. $19.5. Yeah, so this is just those monthly open, the tops of those bars. That's why it's significant right now. So there's a lot of overhead resistance. You have a macro channel line, which is this orange one. You have monthly stuff in play, and you have the top of the micro channel. So top of the micro channel, top of the macro channel, monthly horizontal, which has been broken and is now resistance. You have triple resistance there. And again, Wednesday could go pierce right through it, then come back below, because Wednesday volatility might ignore this to a certain degree. But in general, for normal price action outside of whale volatility around FOMC, that's a lot of resistance up top, a ton of structural resistance. Not to mention, you have things like the daily 10 EMA, that price is way below, and oftentimes you can rally right up to it and then make a lower high on the daily time frame and come right back down. So you have the daily 10 acting as resistance as well in the same area, right? Micro channel top, macro channel top, monthly, and then the daily 10. So now you have four things, and 4 different groups of sellers would sell in the same area for totally different reasons. It's going to be hard to get above 19.5. But if it does, that could, so if 19.5 is broken, and this is probably what I'll end the Bitcoin portion of this live stream on. If particularly the Tuesday candle that we're on right now, if it closes above here, and this is roughly the daily open for Tuesday. So if price gets back above here within the next hour and 40 minutes, the day will be green. It'll go from being red all day, and end of day attacks happen, right? And it would turn green right at the last 30 minutes. Like if you start seeing price spike up, New York time, 7:30 p.m., or within an hour after I'm doing this live show, you could the micro and midterm timeframes could really turn around pretty quickly if this day closes green, and let me show you why. And then we'll probably be done with this portion of it. This is really important, a visual of why this monthly cliff is not just important from why is it there, but if price gets back above here, particularly today, why is that a big deal, right? It really would be a big deal. Let me go to a cleaner chart. I'm going to go to the daily. Check this out. So it would be a candle reading. And the Japanese, or just, farther East Asia, they read candlesticks a lot more, and their market opens around candle closure. And so if this flips green and Far East Asia starts coming online to start trading crypto, they're going to see a pretty big downturn that was bought right back up. So they will see bears doing a lot of work for the bulls to overcome them. Bears doing a lot of work for the bulls to overcome them. And you'll have a green candle with 2 long wicks down. And they're going to interpret, yeah, the bears are doing a lot of work to get less done. The bulls are getting ready to take over in the micro timeframes. And it could cause several daily green candles in a row, potentially, if that were to happen, particularly today. Am I making sense with what I'm saying? So just imagine this red candle right here is green compared to after this guy. Hopefully you can see the wick on this. So if this were to flip green, imagine this is green up here after this day. That's a big deal. And you'd probably get one. Yeah, I think you would easily get 2 green days in a row. Would it go super high? Maybe not. But I think at bare minimum, it would go up to this origin line and outside once again of both micro and macro channels. I think it would go above both of them right there. And then let me put on the 5-day chart. So if the 1 day would cascade potentially to a move up to here, that could potentially cascade another trigger, the 5-day. That would mean the 5-day flips green as well. And imagine this, all this red stuff just disappears and this turns into a green wick, kind of like this wick here. So imagine all this area of consolidation with a red wick below it. So this line, a red wick below it, a green wick below it, a red wick at it, a red wick below it, and it flips green. That could create multiple, like that could get you multiple 5-day candles that are green. And it could all be stimulated by an end of day attack today. But it would probably have to, so just getting above that monthly line that I talked about, I think it was 19.5 or so, getting above it after the candle closure is probably not going to cause the same effect because the candlestick reading the interpretation won't be quite the same. Get my drift? So if it happens soon, it could cascade into a big deal, and that could send price up to 23K. But I'm not saying that that's the most probable scenario. I'm saying that's something to look out for, and that's the only real interesting thing that I see as a potential future play of the of essentially traditional finance whale algos. They might, yeah. I'm kind of interested to see if we're going to get an end of day attack today, because it'd have huge implications, and that is the Bitcoin portion of the live stream. So I'm going to start answering some questions.